Welcome back. So we're watching out for a slightly more cautious start as far as Indian trade is concerned. The implied open has been telling us that we could be starting about 100 points or so lower. Asian markets are mixed, 128. Let's just pull up the Hang Seng index as well, because the Hang Seng is cooling off after yesterday. I mean, even the Hang Seng was up 4%. So a bit of a pullback in that market as well. But others like Taiwan, you can see Japan, they're still positive. Now, what about individual stocks? So let's straight away get to the CNBC-TV18 list of top stocks to watch. Starting first with what else but Tata Steel. Nigel, how were the numbers?
Well, Tata Steel's numbers actually were more or less in line with what the street was working with. If you look at compare the numbers, the revenue, the EBITDA number, the margin's a little bit better as well out there. But for Tata Steel, we normally look at the EBITDA per ton for both the geographies. That is for India as well as Europe. And those were bang in line with what we were working with. So India was at around 12,700 rupees on a per ton basis, while Europe was at a negative $37 per ton. So more or less in line on a per ton basis. Netherlands, they managed to eke out some gains out there because things are stabilizing, while you have the UK operations that continue to drag. The positive is that because of the release of working capital, you had the net debt that's come down. And over the last 2 quarters, actually, it's come down from around 88,000 crores. It's come down to around 82,500 crores or thereabouts. They've also given a bit of a sweetener. They're giving close to around 3.6 rupees of dividend. And they'll be investing close to around $2.5 billion, to fund the UK capex. That's more or less in the price. I'm going with green out here because these numbers are in line with what the street was working with. The outlook is better because now we have the safeguard duty and, we've seen a bit of a perk up in terms of pricing. So that is good. And they're also guiding for cost savings of around 11,500 crore rupees for the coming year. I'll speak to the management later today, but going with green on this one.
You've had a really busy last 12 hours, Nigel. So let's quickly also talk about Hindalco because Novelis's numbers came. So what's the read-through?
What tells you I don't normally have busy evenings,
Okay, extra busy evening.
Normally on the ball, yeah. But anyway, since it's my home sector, yeah, Hindalco's in focus because Novelis came out with its set of numbers. And those numbers were actually good. As they had guided us that Q4 will be better, Q3 was an absolute washout. So the volume number came in at around 950,000 tons. On a year-on-year basis, not too much of a movement. But on a sequential basis, remember Q3, you have Christmas and the holidays in the western part of the world. So it was up by close to 5 to around 6%. Net sales, adjusted EBITDA and the EBITDA per ton, that came in at around $494 on a per ton basis. You'll see it's still lower on a year-on-year basis. But that graphic play tells you the picture because they had said that the Q4 EBITDA per ton will be similar to what we saw in Q2 and bang on. So that improvement is something that the street will like. The net debt number, well, it's not moved too much out there, more or less constant on a quarter-to-quarter basis. The capital expenditure that they've laid out is around $1.9 to $2.2 billion for the next year, which is par for the course. But they're also looking at some savings, in the next few years. However, they have withheld their guidance, which could be seen a bit of a negative because they're expecting geopolitical pressures. The globe is in a bit of a flux, and also the tariffs could weigh on it. And that's why they're saying that they're factoring in $40 million on a quarterly run rate to hit their EBITDA number. That will be a bit of a negative. But since the numbers are more or less in line, well, going with a tinge of green on this particular one. Not giving a guidance, though, that could be on the stock at some point of time. But pharma, that's been the big headline for the last 24 hours. And Ekta Batra just resumed and she's on the ball. Ekta, tell us, what's the recent developments?
Well, yes, President Trump has signed that executive order to align U.S. drug prices with peer nations. He has mentioned in his executive order that the mechanism to let patients buy drugs directly at the most favored nation prices is something that they are going to execute. Remember that U.S. drug prices are over 3 times higher than in other OECD countries. U.S. funds 75% of the global pharma profits despite being under 5% of the population globally, and Americans subsidize foreign discounts through inflated domestic prices. The impact is that the steps are not as binding as feared. Pfizer, Eli Lilly, Amgen, Sanofi, Novartis, all of these stocks were higher in US trade, giving you an indication of the executive order. There is, as of now, no direct fallout on generic drug pricing, so maybe that would be a relief for Indian pharma stocks. Aims is to basically equalize pricing of patented drugs available in Europe, Canada, which are still cheaper than the US. So they want to equalize that and eventually remove the middleman in the drug pricing scenario in the US. The street will, however, wait to see what the steps would be when it comes to import tariffs on pharmaceuticals. That would be the larger picture to watch out for.
All right, Ekta, when Nigel said on the ball, Ekta, I thought he's talking about paddle or pickle. Which one is it's pickle or paddle? All right.
For sure.
Paddle. All right. Thanks very much for that. Well, let's talk about Happiest Minds next. Vinny's here with what's happening here. Vinny, good morning.
Hi, good morning. So in terms of Happiest Minds, the Q4 numbers, a slow quarter coming in for the company. So we are expecting a bit of a red coming in on the screens for Happiest Minds. Revenue in terms of dollar terms, very, very flattish, just 0.3% growth on a sequential basis. CC growth is just at 1.1%. Rupee revenue of around 2.6% on a quarter basis in terms of a growth. Now, overall, when you look at it for FY25, also the CC revenue growth that came in at 25.6%, which is much below the aspiration or the growth target that they had for themselves of around 30%. So, that is why also we could see a bit of a, subduedness that one could watch out for in terms of the stock. EBITDA, when you're looking at it on a calculated basis, 15.4% versus 17.1%, while what the company is reported is at 19.3% versus 21.1%. So Q4 EBITDA margins 19.3%, which the company is saying they've reported, which is lower than the guidance of 20 to 21%, as 20 to 22%, which is the guidance that they're given. But for the full year, when you're looking at it, yes, they are in the range of the guidance, but Q4, surely a miss coming in versus the guidance. Wage hikes, senior employees impacted the margins in Q4, as well as PAT also was down by 32% due to exceptional items. So we are expecting red here.
Okay, all right, got that. Thanks very much, Vinny, for that. So Happiest Minds is going to be on the radar. In fact, we're talking to management, like we just told you, about 9:50. The top two from the company join in to give us an outlook ahead. Okay, some more numbers. We have Mangalam joining in now. I think he's been looking at Chalet hotels and also Ventive hospitality. Mangalam, morning.
Well, if there's one certainty over the last few quarters, it is that FMCG volumes are going down and hospitality is continuing to do well. So you have Chalet hotels, 25% revenue growth, and this is seasonally not even the strongest quarter for the industry. The EBITDA actually jumped by 32%, implying a margin expansion of over 300 basis points, and the net profit surged by 50%. So you're looking at growth coming in from average room rates that have increased by 21% for Chalet hotels. Occupancy expanded by about 30 basis points, but higher room rates caused the margin expansion for the company and revenue growth. And additionally, they also have, commercial real estate, so new properties coming online, and that actually increased by 75% year on year. And most of that flows through to the EBITDA, and that explains the big move out there. Even Ventive hospitality, if you look at the reported numbers, they would look very different, but you have to look at the pro forma numbers, and that the company has given on their presentation. It's a 20% jump in their revenue, 717 crores, 23% jump in their EBITDA. That implies a margin improvement of nearly 100 basis points. Here as well, occupancy improved by 5 percentage points and average daily rate increased by 5%. So all these factors leading to a good number coming in for Ventive hospitality. So these hotels checking in gains.
All right, Mangalam, thanks a lot for that. Well, from Mangalam, we're tossing it back to Ekta. Ekta, Piramal Pharma and KIMS on your radar?
Well, yes, Piramal Pharma has announced that there's going to be a $90 million investment committed to expanding 2 US facilities. The expansion aligns with the growing US customer demand and onshoring of drug supply. Separately, the US FDA inspected the company's Turbhe facility in Feb, and now they've received a voluntary action indicated report along in the EIR, so that's definitely a positive for Piramal. KIMS numbers look good. 796 odd crores is what they did in terms of the revenue. Margins were at 24.8% and profit at around 102 crores. So KIMS didn't do too badly in terms of the quarter. For FY25 also, they closed with a growth of 21%, margins at 25%, and a profit at around 382 odd crores. So looking good for KIMS.
Okay, all right, Ekta, thanks a lot for that. Well, let's hop across to Nimesh. He's back on the ball. Nimesh, Paytm and KFintech, you gave us a sneak peek. You're expecting something out there? Hang on.
Yeah. So, Nigel, it looks like the block season is back. There are 2 large blocks today and 1 OFS as well. The first one is KFintech, large block, 10% is what General Atlantic is looking to sell via block deal in KFintech. Again, they've upsized the book today morning, so it looks like the demand is quite strong. It has an 8% discount to yesterday's closing price in terms of pricing for the block. So nearly 1750 crore is the size, and General Atlantic is looking to sell 10% in KFintech. So that's one large block. The second big block is going to be Paytm, and Financial is looking to sell 4% stake in Paytm via block deal. The indicative price is around 6% discount to yesterday's closing price. There, I believe the demand is not that strong, so maybe the deal may happen at the lower end of the indicative price. So that's something to watch out for. After the block deal, Ant will still own close to 6% stake. So they're owning over 9%. They're selling 4%. So 5-6% they'll still be left with. And there is a bit of cool off as well for the further blocks. So two large blocks, Paytm and K Fintech. I believe there is a larger demand in K Fintech compared to Paytm in today's block deal.
All right, Nimish, thank you very much for that. Well, let's just quickly recap what's the stocks that we put out for you. And there are lots of them. Hindalco, there's Pharma, Tata Steel, Chalet Hotels, Ventive Hospitality, KIMS, Piramal Pharma stocks in the green. There are three names in the red. There's Happiest Minds, Paytm and K Fintech. Two of them, of course, with regards to blocks. So that's the picture. What's happening as far as commodities are concerned? I think industrial metals rallied yesterday. Gold, oil prices are higher. Gold is lower. So a fair bit of movement all around. Manisha, good morning.
Oh, well, absolutely, Prashant. A couple of things that the markets are still reacting to. One, of course, as we've been talking about, the US and China temporary agreement to lower tariffs for 90 days. And that impact really has been seen for the dollar index, which is trading at a one-month high, above 101.5 at this point, absolutely weighing and putting pressure on the gold prices, which fell 3% yesterday and are just about holding $3,200 an ounce in the Asian markets now. Crude oil prices, after gaining yesterday, have eased from those two-week highs as the markets now focus at OPEC and allies, which are increasing production for the month of May and June as well. But yes, one sector which has continued to gain for a second straight day today has been the industrial metals. Copper gained 1% overnight and is trading above 9,500 right now as well. Aluminum is trading at a one-month highs above 2,500. Zinc is trading at a 5-week highs right now. So across metals, we're looking at strong gains here. And because US and China are quite strong when it comes to agricultural commodities as well, and that trade might rebound and regain, we're looking at soybean trading at Feb highs, cotton at a 3-week highs, corn prices off from 2-month lows as well. So most of these commodities where China trades are doing quite well.
Okay, indeed, that China trade is on. Manisha, thank you very much for getting us the latest. We'll take a quick break on that note. Come back on the other side. We'll have Amnish Agarwal of PL Capital joining in. We'll discuss some fundamental stock ideas for the day.